about taxes, tax law, changes, and to have you call in and tell me what questions you have. And I want to thank you for that. But some people said, well, you need to give out your telephone number more often. How much do you charge? Do you give free consultations? So my telephone number at the office is 289-9300. Yes, I do give free consultations. You can call me over the phone, ask me your question, or you can come in the office. Call, make an appointment, though. This time of the year, we're very busy, and I can sit down and at least see what problem you're having and tell you what I think it's going to take to solve your problem and how much it's going to cost you to solve your problem. And beyond that, we just have to see, because everybody's problem's a little different. Everybody's problem's got its own unique set of issues. So it's hard in a program like this to give a blanket solution that'll be good for everybody. A lot of these things are very individualized. You can go to my website, gilberttalkstaxes.com, click the Contact Us page, and you can send me an email, put your question in there. Now today here at the program, you can call in. Christy, my wife, is answering the phone. Give her your question. You can call here at the studio at 287-3356. If you've gotten a letter from the IRS, Department of Treasury, IRS, or you've gotten a letter from the North Carolina Department of Revenue, or you've gotten a letter from any other state that you might have had a tax issue in, usually those letters have a code in the upper right-hand corner. The IRS, most IRS notices begin with the letters CP, Kathy Paul. The most common one is a CP 2000. That's the statutory notice of deficiency. That's a bad one. That one means that they've assessed you and you owe money, and you have 90 days to respond. I could do a whole show on CP 2000s and what to do about those. I see those all the time. Or it'll say CP 0054 or whatever. If you have any of those and you're calling in about that or you're emailing me about that, be sure to write that code down. And if you call in, tell Christy that code. In my world, those codes mean a lot, and it helps me to get right to the root of the problem, and it saves a lot of time. Today, my engineer is Todd. Good morning. Thank you for helping me. Todd wanted me to tell you that on our live stream at www.wcab59.com, there's also a chat. And I know some of you listeners have been chatting with each other the last couple of weeks, and that's great, and you can feel free to ask a question that way. Todd will be monitoring those, and he'll get those questions to me. I also have my laptop here, so if you email me, we'll get that, and I'll try to respond to them here on the air. 30 minutes goes by very fast. Those of you that were listening last week, I barely scratched the surface about 1099s, and our 30 minutes was up. And I hope I answered everybody's question, and those of you that I got back to, thank you very much. And I hope I answered your questions there too. I am an enrolled agent, and an enrolled agent is a person that is enrolled with the IRS. There are only three groups of professionals that can represent taxpayers before the IRS. One of them is an attorney. Typically it'll be an attorney that specializes in taxation. The other one is a CPA, and the third one is an enrolled agent. Of the three, only an enrolled agent is enrolled with the IRS. And to become enrolled, I had to pass a three-part test, very difficult, but my focus is solely in taxation. So I also have, and I've got to disclaim here a little, Todd, I have a Series 6 and a Series 63 license. Those are securities license. I'm licensed under FINRA, and I have those licenses so I can help people with IRAs, and I can help them with retirement plans, and I can help them with securities and investments. Now, in this program, I'm not getting into financial advice or discussing financial markets or things like that, because this is really not what I want this program to be about. Like I told Jim, I wanted this program to be about education, to be about teaching, and to answer questions that you, the listeners of WCAB, and those of you listening to us on Northland Cable, Channel 5, or live streaming, questions that you may have. Our current tax system is a very complicated tax code. And it was written by lawyers, it's interpreted by lawyers, and if you ultimately ever have to go to tax court, the decision will be rendered by a judge who is a lawyer, or was a lawyer before he became a judge. Most people, the common person, doesn't have access to that kind of skilled talent, so I try to at least inform a little. If you get letters from the IRS, if you get letters from any government agency, Social Security, North Carolina Department of Revenue, even local taxes, your local government, and you don't understand that letter, please get help. Find a professional. Most professionals will give you a free consultation, at least hear out what you have to say, and I would tell you to get a second opinion. Even if you come see me, I would tell you, no, I will tell you to get a second opinion if you don't understand what I've told you. I try to, break it down and make it as simple as possible. Because yes, you're dealing with the IRS, but ultimately at the IRS, you're dealing with a person. And that's a person just like you. And they've got the rule books and their law books, and they know what they're to do on certain things. But there is a lot of gray area in a lot of these issues. And a lot of times it's just understanding what the issue is, understanding what the problem is, why they interpreted the way they did, and usually when most people are dealing with the IRS, it's because the IRS is telling them you owe a whole bunch of money that you either didn't know you owed or didn't feel you owed, or you know you owe it but you don't want to pay it. So you're having one of those problems, and that's where, if I say nothing on this program, I want you to see a professional, somebody that deals with them all the time. And to that end, you can call me, 289-9300, go to my website, gilberttalkstaxes.com, or just whoever you know that you deal with in your community. I got a lot of feedback last week on Angie and Jeff's story. I don't know, let me recap that. Angie was the lady who did not get a W-2, and when she called her employer, the employer had filed bankruptcy, so Angie thought she didn't have to report her income that she had made for that job. And in fairness to Angie, by the way, Angie is not her real name. In fairness to Angie, she'd had 3 other jobs, so by the time she realized she didn't get the W-2, it was already the middle of tax season, and she was under some pressure to get her tax return done. But that was the wrong approach. Yesterday was the last day for employers to put a W-2 in the mail and 1099 in the mail to their contract labor, their vendors, and their employees. Now, just because you didn't get it yesterday does not mean you can go ahead and run out and file a tax return without putting that down. The IRS, and another resource, while you're jotting numbers down, go to the IRS.gov, and that's .gov, not .com or .anything else. It's www.irs.gov. It's a great resource. And I'm one that tells people to stay away from the internet when they're trying to solve issues, because Wikipedia and Investopedia and some of these other websites have just not been a reliable source of information when it comes to complicated tax issues and complicated tax law. You may get some feedback and have some understanding on some of these forums, understanding of what your problem is, but you really need to consult a professional. But I do advocate www.irs.gov. All their publications are online. You can either download them as a PDF or open them up right there in your computer and see them, and they will answer a lot of your questions. A lot of the forms are there. So what the IRS is saying, if you did not get your W-2 by January 31st, to wait until February 14th. Now, you're supposed to contact your employer and see if there's an alternate way they can get it to you, or if they just put them in the mail and just wait, or if you can go by and pick it up. Some of these larger companies that are headquartered in other parts of the country usually have their accounting departments there, or they outsource their accounting departments. So your W-2 could be coming from California, New York, Pennsylvania, there's anywhere, other countries. So, but you're supposed to try to make a reasonable effort to find that W-2 and that 1099. I want to say it again, just because you didn't get it does not mean that you don't have to file it. In Angie's case, Angie's story kind of took a different twist. Her employer had filed bankruptcy. And Angie did actually try to call her employer. When she found out her employer had filed bankruptcy, she said, well, that's it. I'm off the hook for that. Let's just go ahead and file our taxes. Well, wrong. And that was where I shared Jeff's story. And Jeff's not his real name. Jeff worked for a company that went bankrupt. He came to me. Actually, he had found out they went bankrupt before he was supposed to get his W-2. I simply made a couple of phone calls and found they were in bankruptcy. It was a court document that they were in bankruptcy. It was found on the internet when I searched the court records, and I found out who the attorney was handling the bankruptcy. I contacted that attorney, and in Jeff's case, he was very fortunate because the attorney, as part of the bankruptcy, the attorney had actually seized all the computers as part of all the assets and the information. They had seized all the computers that belonged to the business. So they had already accessed all the financial information. They had all the check records and everything, so they were able to generate a W-2 for Jeff. I was able to file his tax return, and life was good. And there were no issues there. But he did it the right way. Angie did it the wrong way. Angie didn't claim that income. It turns out that her employer was in bankruptcy. The bankruptcy attorney had taken care of it, had filed all the right documents. So about 6 months after Angie files her tax return, and by the way, Angie got a pretty big refund because by not including that income, some of the child tax credits and some of the earned income tax credits kicked in. So she got back about a $4,000 or $5,000 tax refund on her tax return by excluding that income. Well, about 6 months later, because the IRS may be slow moving, but they are moving, and their computers have all this in there, and they don't forget. So about 6 months later, she gets a letter, a CP-2000 that I mentioned earlier, saying that they had this little W-2 that was hanging out there, and they had recalculated her tax return for her, just in case she couldn't get around to doing it herself. And they determined that she owed them $8,000. They wanted their $5,000 back. Oh, and on top of it, they threw in some interest and some penalty and some late filing fees and sent her a letter saying she had 90 days to give them $8,000. Well, she came to me and I was able to put her on a payment plan and kind of ease the pain a little, but it took her 6 years to pay that back. And it was a pretty big payment every month. And don't forget, you owe the IRS, you owe North Carolina, you owe any state. They can garnish your pay. They can garnish your Social Security. They can foreclose on your property. They can basically take your house away from you if you ignore them. So, you don't want to be an Angie? What you do is, if you don't get your W-2 by February 14th, you can take your check stubs, hoping that you saved them all, take your last check stub of the year. Actually, I like it when people bring me all of them, because that way I can just go through it and see, because things do happen week to week. And there's a form that you get on IRS website, irs.gov, and you go through that form and fill it out. Now, you don't e-file that. And if you're getting a refund, it will hold things up, and it's one of the reasons why people don't want to take this process, because it is the longer process, but it's the right process, and it's the process you need to take. And so we paper mail it in, and then they'll go against their records where that employer was filing his forms with the government, and then they'll get back to you and they'll tell you either we were right, we were wrong, or they'll go with what we had, and they'll usually shake it out. And that form is a 4852. You get that off irs.gov. But if you're in this position by February 14th, I really recommend you consult with somebody just to make sure that you do it right. Another question that I get this time of the year, and I had it yesterday with two people sitting across the table from me. I do their tax return, and I tell them how much they owe because they didn't get a refund, and they say to me, what can we do to reduce that tax debt? Well, January 31st is too late to be trying to figure out what to do to reduce your 2013 tax debt. There is one thing that a lot of people recommend, and it's really big, and it's pushed. A lot of banks push it this year, and you'll see a lot of advertising for it, and a lot of financial planners push this, is we'll open up an IRA. An IRA reduces your taxable income, and you can put up to $5,000 in an IRA before April 15th, and even if you file your tax return already and you want to put money in an IRA, you still can. And you just amend that return. Or if you know you're going to put money in an IRA, the IRS will let you preemptively put that number on your tax return, but you better do it, or they will, because they will go back and they do look at those IRA filings and make sure that you did that. But there's a couple of problems with that. I don't know too many people that have $5,000 laying around that they can pull together and send to a bank to put in an IRA, and it's $5,000 per taxpayer. If you're over 50, there's a catch-up rule. It's $5,500, and it's per person. So married filing jointly, you can do up to $10,000. Again, I don't know too many people that have $10,000, and it doesn't have to be the full $10,000. It can be any smaller part of that. So that's really, I don't recommend that much. And then, like with my clients last night, they were younger couples, and I'm very leery of pushing IRAs on younger couples because of some of the penalty restrictions. If you pull that money out, there's a 10% penalty if you pull it out before 59 and a half, and then you got to pay all the interest as a lump sum. So I'm very careful with IRAs. But what I was getting to with all that is, now is not the time to be thinking about tax planning for last year. Now is the time to be thinking about tax planning for next year. And unfortunately, the only time we think about it is during tax season, because it's the time that you look at it, and people come into my office with a box full of receipts and papers, and they're just hoping that I'll find a refund somewhere in that box of papers. And there's really a better way to do that. And the better way is to sit down with your tax professional, sit down with your financial planner. If you don't have one, get one. I told you most of us will talk to you for free. Get a consultation. Take an hour out. Take a half hour out. Sit down and talk to somebody. I can't give you blanket information because everybody's situation is so different. I like to sit down and individually look at that person. Todd here has one financial picture that different from Christie's, from Angie's, from Jeff's. Everybody has a unique tax issue, a unique financial profile, and you need somebody that's really going to take the time to sit down and go through it with you and see what you got and see what's good for you. So if I leave you with anything in today's show, it's please, now is the time to start planning for your 2014 tax refund. You can call me, Gilbert Carmona, at 828-289-9300. You can call the studio, 287-3356. You can email me, go to gilberttalkstaxes.com, click the contact page, and send me an email. I got some interesting feedback about, I made a comment, actually I made a couple of comments, and it was really interesting. It started a lot of questions. People have asked me, during the last elections, the last big elections, the comment was made that 47% of Americans do not pay taxes. Now, what they were really referring to there is 47% of Americans do not have taxable income, therefore their income is not taxable. Because the comment I made is that in this country, it is impossible to avoid taxes. It's everywhere. If you buy gasoline, taxes in the gasoline. If you buy food, taxes are in the food. If you work, of course, it's taken out of your check. If you buy a car, and I mean the examples are endless. All our interactions, in some way or another, have a tax implication. But so that's really, that comment kind of became one of those 2-second sound bites, and everybody said, well, 47% of the people don't pay taxes. No, I would tell you that all Americans pay taxes. What happens is that because of child tax credits and because of earned income tax credits, because of the standard deductions that were allowed, and then because of the exemptions that were allowed when you do your tax return, a lot of people, if you have a family that's making $35,000 a year, 2 children, just standard things, they can really whittle, without doing anything fancy, they can really whittle that taxable income down to almost zero when they're done, if they have a house and they get some of the Schedule A credits. So they, in essence, no, they don't pay income tax, but they're still contributing to Social Security. They're still contributing to some of the other things that are just unavoidable. And I discussed about the carbon tax. I would even argue with you that the carbon tax was an effort to tax the very air we breathe. So no, there is no way in this country to avoid taxation, but with a little knowledge and a little planning and just a little forethought, you can really reduce your taxable burden down. If you think it through, you can mitigate it, and you can just spread it out over years. If you're some of those fortunate few that are high earners and are getting hit with a lot of this additional taxation, there's a few more sophisticated things you can do. I don't advocate tax avoidance. I just advocate a knowledgeable approach, thought out, planned out approach to your taxes. Again, call here at the studio. We are wrapping up closely. 5 minutes left. If you can call me here at the studio, 287-3356. You can call my office, 289-9300. Go to my website, and please feel free to ask me. There's a lot of other things I want to get into, but Todd, I don't think I can do it in 4 minutes. I just don't. I get a lot of questions about child tax credits, who qualifies, who doesn't qualify. Again, I want to get back to that irs.gov website. You can go on there. There's a publication on there. It's really a laundry list. There's residency requirements. Every year I get people who have a distant nephew that they send a little money to, and they want to put them down as a dependent. Well, there's some rules about that. That's a whole program all of itself. Child care, if you paid for child care so you can work, or actually they've even extended that to if you're looking for a job, that's deductible. There's a whole set of rules there. Again, that's a 30-minute program. The education credits, the Hope, and the Lifetime, there have been some changes there. If you attended or had a dependent attend Isothermal Community College, their 1098Ts, that's the form they give college students, went out on Tuesday, and I know there was some issues with mail because of what happened Wednesday. Everything was pretty much shut down. People didn't get their mail. So if you didn't get it by Friday, but you attended Isothermal Community College, you probably should be getting it today. Should have gotten it yesterday. You could be getting it today. You could be getting it Monday. You can call over there to the financial office, and they can help you with that if you don't get that. But there have been some changes there. Those of you that have student loans, the interest is tax deductible. A lot of them do not mail. If you've gone paperless, especially if you've opted for the paperless option and you're not getting a statement in the mail, be looking for an email notice, but a lot of them you have to log online. Unemployment. That's another 30-minute program, Todd. Remind me about that one. Unemployment. When people tell me they're going to go on unemployment or they're on unemployment, I always remind them, unemployment income is taxable. Unemployment income does not count towards the tax credits because it is not earned income. So be aware of that. If you are a person that gets child tax credits and gets earned income credits and you are collecting unemployment, it is not earned income. Therefore, it could affect these credits and other credits too. But it is taxable. When you logged on, they asked you, do you want federal and state taxes withheld? Most people will say yes to federal, and they think it includes both. No, you have to specifically pick both. And I mean, it's a sizable chunk. If you've collected, say, $10,000, your income tax on that could be $1,200-$1,300, depending on the things with your filing. So that's a big one. But there is a 1099-G that you're going to get from Unemployment Commission. That one, go online to get that one. If you don't get it in the mail, remember that is taxable. It's another one that comes back to get you. Todd is holding up little fingers at me, telling me that it is time for our program to wrap up. There is 1 minute left. I want to thank everybody for listening to me. I want to thank our subscribers at Northland Cable Channel 5. Those of you on www.WCAB59.com, I'm giving you a big wave. And Jeff, I want to thank you again for listening to me. Have a good morning, everybody. I will be back next week to talk taxes, because taxation with representation has not been such a good thing either. Thank you, everybody.
Anything you want to say to Old Man Winter?
Go away!
Relax and cuddle up to your radio. We'll keep you warm. Today's hits and yesterday's memories. Family-friendly AM 590, WCAB.
This is Dakota Livesay with Chronicle of the Old West Weekly Edition.